Let's introduce our guest on the show this morning. Kranthi Bathini, equity strategist at Wealthmills Securities, joins me this morning. Kranthi, good morning. A lot to sort of discuss in the market mood, but I think two big drivers seem to be oil prices, which are back to levels above $105 a barrel, and then of course the sentiment, the weak sentiment on the commentary which the IT majors are giving out for growth forecast for FY27. What do you make of these two events?
Kartik, you're absolutely correct. The Brent is above $105 per barrel, which was giving a comfortable range for Indian markets in the last 10 days of the trade. We are not sure how these supply chains are moving at this point of time. We have a ceasefire announcement, and also that's getting continued. But as there is no concrete statement, bilateral statement in terms of the Middle East peace is concerned, still it's lingering. That's where the impact we are witnessing on the crude oil prices at this point of time. If the crude oil prices are inching from here, if they are trending above $100 per barrel, it's definitely going to have a direct impact on Indian economy in the medium to short term. So we need to have a cool off of crude oil in the coming days and weeks. That is extremely crucial for the Indian economy. And we have witnessed when the crude, whenever it cools off, we witnessed a fabulous rally and recovery and a broad-based strength the market have witnessed. We even the past week we went to the range of Nifty 24,500. From there onwards, it has given up the 500 points on Nifty around. We need to look forward for around 24,000 levels of the Nifty now. And the earnings season, as you rightly mentioned, there are no negative surprises at the same point of time. At the same point of time, there are no positives at this point of time. The earnings season has been leading as IT pack, IT companies, large cap IT companies especially, they could not able to entice the market as we are in the change of atmosphere at this point of time in terms of the IT is concerned. The Indian IT majors especially, they have been relying on per employee revenue. Now the narrative has changed in the global space at this point of time. Right now, the Meta has announced the employee cuts, reducing their headcounts at a very drastic pace. And Indian IT companies have been relied on the per employee revenue. Now, this is the season completely changed the narrative. So the IT majors have to retweak their business models. Of course, they have been doing that retweaking of the business models, AI systems and business models are concerned. It will take some time to yield the results for these IT majors in the coming coming quarters. That's
Right.
where the overhang for the IT companies at this point of time.
Of course, a massive overhang visible. And let's talk actually about, Infosys particularly, because it reported a 21% growth in net profit year on year to, to about 8,500 crore rupees. And this is coming despite a headcount reduction of about 8,400 employees in the financial year gone by. So but I think what is really spooking, like you've also mentioned, Kranthi, is the long-term projection and the sort of guidance which the management is giving for the year ahead. But overall, what do you make of the sort of AI narrative? How's that really playing out? Because you've seen a headcount reduction, which is something that investors would often celebrate, even though there are job losses. It reduces cost. At the same time, you're seeing a growth in profit. So overall, how's the AI story really playing out?
Karthik, you made a very valid point. In terms of the positioning of the Indian IT companies has been, we always look forward as the companies have been in the service industries. Headcount makes a key important role for the revenues of the IT companies. So whenever there is a reduction of in the headcounts, as you rightly mentioned, there is some kind of a cost component. But at this point of time, where is the growth component? That's where the missing part at this point of time. So the AI is the important tool at this point of time. How the existing teams are going to be, the human resource is going to be adaptable in terms of the AI is concerned. Of course, Infosys also announced an announcement that they're tying up with OpenAI in terms of the AI source is concerned. That's a welcoming move, but these are all going to take time to manifest in terms of the revenues and profits are concerned. And the other side of the coin, how the US growth is going to be, because by and
Absolutely.
large, these IT companies are going to derive their revenues from US growth. And
Right.
there is a lingering impact of US growth. So all these points put together, we are witnessing the stock consolidation and reduction of the stock prices in the medium to short term.
All right, and now let's move on from the tech sector to the energy behemoth, Reliance Industries, because investors are awaiting those Q4 earnings today. In fact, this afternoon, this evening, we will hear from the Reliance leadership on the Q4 earnings, on the yearly earnings, and of course, hopes are high on some announcement on the Jio IPO as well. Kranthi, what are you expecting from Reliance Industries Q4 earnings today?
By and large, it's going to be a positive quarter for Reliance Industries is concerned, Kartik. That's what I'm expecting. We are expecting, and as you rightly mentioned, the Geo IPO announcement also around the corner. By and large, the sum of the parts business is concerned. The retail, the digital, and the petrochemical businesses are going to lead. Reliance Industries and petrochemical business is the pocket we need to look forward how because of the volatility in the crude oil prices, how the refining margins, GRMs, grass refining margins are concerned. By and large, it's going to be a positive quarter for Reliance Industries is concerned.
A positive quarter for Reliance Industries, and we really don't know if that all big announcement of a Jio IPO really comes through. Expectations, of course, continue to run